Shares of DLocal are down around 27% at the time of making this video after the company reported a double miss. Now there's still growth, there's still profitability, but the problem here is, as they've alluded to in the last earnings call, is that they're investing right now in the business. So in the short term, gross profit, adjusted EBITDA, net income, the profitability side of the business is basically taking a hit. The market does not like that. So at the time of making this video, stock is back under $10 with a market cap of probably closer to $3 billion. And so all the valuation metrics right now will be slashed by 27% or so, maybe a bit less, because these are forward-looking metrics. Forward PE, EV to EBITDA, price to sales, it is definitely going to get a bit cheaper, and also price earnings to growth. My opinion, as I said, this is a long-term play. Short-term, they're taking a hit because they're investing in the business. I've made the comparison last time talking about Adyen. Adyen last August, remember, stock crashed 55% or so. Of course, Adyen was also trading at a higher premium than DLocal, but they also said the same thing. In the short term, EBITDA margins are going to take a hit because they're investing in the business. They come from a position of strength, and so this will be helpful for the long run. But in the short term, the company takes a hit. We know what happened next. I mean, stock crashed 55%, took a while, but then they provided a business update, still provided some good numbers, and then the stock went back up. Of course, with DLocal, it's a smaller company. Adyen is one of the best well-run companies out there, especially in the fintech space worldwide. So I'm not going to compare it apples to apples, but it's a bit of the same idea. As I said in the previous video, in the portfolio video, DLocal, small position, I did not want to add before the earnings report because of this exact scenario. And now I get to add more to my position at a cheaper price. I remain bullish on the long-term story here of this company, and I explain why throughout this video. Before diving in further, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I first want to start off with their previous 2024 outlook, which they're basically reiterating yet again despite the bad Q1. So TPV of between $25 to $27 billion, representing 40 to 50% year-over-year growth. Gross profit between $320 and $360 million, representing 15 to 30% year-over-year growth. And then adjusted EBITDA between $220 and $260 million, representing 10 to 30% growth year-over-year. EBITDA to gross profit margin was 58% for this quarter. They expect it to be around 70% for the full year. So they're definitely expecting some reacceleration in the coming quarters to reach at least the lower end of their own guidance. As for the midterm outlook, if you don't know what that was, gross profit CAGR of between 25 to 35% and adjusted EBITDA over gross profit margin of over 75%. Now for this quarter, record high TPV in Q1, profitability was impacted by seasonality, top merchant pricing, business mix, and OPEX investment for future growth. So TPV grew 49% year over year, 4% quarter over quarter. Revenue increased 34% year over year, but down 2% quarter over quarter to $184 million. Gross profit still up 2% year over year, but down 10% quarter over quarter to $63 million. And adjusted EBITDA down 25% quarter over quarter and down 19% year over year. Those are basically the main reasons why the market is definitely pushing this stock down. But if you focus on what will be the most important metric for future long-term growth, TPV performance has been quite incredible. I mean, you've seen huge growth. Remittances are up 94%, SaaS up 54%, ride-hailing 55%, commerce up 195% year over year. Now, with regards to the gross profit decline, they did give us a couple of explanations throughout the earnings call. So first up, they decided to sustain their planned investment increases that support long-term growth. So that's one of the reasons. Then, one of the largest merchants achieve a new level in their tiered pricing scheme and also renegotiate fees as their contract came up for renewal. Given the still high concentration on top 10 merchants that the business has, such a renegotiation directly impacts revenue growth. Secondly, product mix shifted towards lower monetization payout volumes as core pay in vertical such as e-commerce and advertising are typically seasonally weaker in Q1. Additionally, a few important new launches that were scheduled for the first quarter were delayed by our merchants, something that we don't control and slowed down anticipated volume ramp-ups that should have offset those declines in take rates caused by the above-mentioned events. But he said that moving forward, they should be less dependent on top 10 merchants as they scale out their business. And if you look sequentially, they saw a little bit of that. The quarter-on-quarter concentration in top 10 merchants is actually down somewhat, which we can see right here. Plus, if you look at net revenue retention rate, that's at 129%. Now, with regards to the delay in new launches for the quarter, we also had some positive color on that. So Pedro here said, by the way, Pedro, the new CEO, previously CFO of Mercado Libre, is one of the main reasons why I actually opened up a position in DLocal. So some of these have already gone live in the second quarter. Some of them are very large, very long-term, high potential clients that would like to be able to go live in Q2. So I'd say potentially in some cases impact already in the second quarter. Others, the second quarter impact might still be muted. But long term, some of these logos are very, very attractive logos that we've been pursuing or working on for quite some time. Eventually, when they go live and we start ramping up for in terms of longer term perspective, I think these are incredibly promising. And hopefully we'll be able to give you updates when we announce Q2 that they're live. So definitely some more positive color on those delays. Now, I do like the new presentations, the extra information that we're getting. For example, here, gross profit in each geography here, so we can clearly see where the biggest hits happened. So Brazil, down 30% quarter over quarter. Why is that? Seasonality of e-commerce and advertising vertical, increase in lower take rate payouts versus pay-in mix, merchant tier attainment, and pricing negotiation. Mexico is up 7%, but Chile also taking a big hit there, 18%, seasonality in e-commerce merchant, and a one-off impact of recovered processing fines in Q4. We have here a reacceleration with regards to Argentina, that's up 30%, reacceleration of cross-border business as liquidity in the market improved. We know that this had a negative impact on the business previously. Then Egypt here, up 8%, wider spreads on FX prior to the devaluation of the official currency in March. So this will negatively impact probably the coming quarters. Nigeria is down 64%, lower TPV as merchants pull back from cross-border transaction after significant devaluation, which is also, I think, something they covered and talked about last quarter. As for the investments, something they also alluded to last quarter, so building the global team to meet our long-term growth ambitions, focus on areas of differentiations, technology, product, and local operations. So employee growth is at 25% year over year, FTE by function, which is basically full-time employees, let's call it, 38% technology and product, 19% corporate central functions, 18% sales and marketing, and 25% operations and expansions. Of course, once they're done with the investment cycle, you're definitely going to see the, let's call it, the operational efficiency of the underlying business. Then, overall for the quarter, we've seen revenue, we've seen TPV, gross profit as well. The bigger hits, as I said at the start of this video, is from the profitability standpoint. So gross profit margin, adjusted EBITDA margin, adjusted EBITDA over gross profit, profit and profit margin are all down year over year. One of the main reasons why the stock is getting hit quite a lot. And so any improvements in the next quarter or in some comments about Q3, Q4 on the positive side is definitely going to be well received by the markets. Now, you might want to wait until that happens, and that's totally fine. Since I already have a small position, I have no problem adding right now since the stock is down so much. And especially if you look at the graph, you can see that the stock is now in an area where previously it found some support. It's basically the lowest it has been since then, since May 2023 and November 2022. Both times the stock did rebound and did find support there, but this on the weekly. So I'm pretty much certain that we're going to be oversold on the weekly. We're definitely going to be oversold on the daily. In my opinion, risk reward wise, this is just me saying this as a long-term investor. A company of $3 billion in market cap, still growing quite fast, still profitable. Oh, by the way, they're buying back, or they have authorized a buyback program of around $200 million. So again, buying back shares, which shares have come down already from their highs. So that's great. Show me another great company. I'm sure you can find, but show me another great company at $3 billion in market cap playing in such a huge market worldwide growing extremely fast, still profitable, free cash flow positive, and buying back shares now at a cheaper price. I mean, I'm sure you can find some of those companies, but not that many exist, in my opinion. Of course, the stock can go lower. Of course, the, let's say, rebound can take a bit longer than expected. That's fine. I'll add accordingly over time. But overall, that's what has happened in this quarter. I'm going to take this opportunity to dollar cost average. Might be completely wrong here. Only the future will tell. But so far, I have full confidence in Pedro and the team behind him. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.